Yeah, let's look at why you're seeing some of this pressure here in the pre-market. Fedex has been the top trading ticker on Yahoo Finance the past 18 hours, and not for good reason. Shares are getting run over this morning after the logistics giant delivered a brutal profit warning for the first fiscal quarter and withdrew its guidance for the full year. This warning is having a ripple effect on the markets and fellow transport stocks, stoking fears about more economic pain ahead. And I have lots to say on this warning here, guys. But first and foremost, let's keep in mind this. This is a management team that came out in June, projected very rosy double-digit earnings growth at a key investor day. They were being really hit hard by an activist investor. Now here today, they're coming out with current quarter earnings guidance, $3.44 versus street estimates of $5.14, withdrawing their full year outlook, and also voicing concern about demand trends in Asia, in Europe, and even the United States. This was a very bad pre-announcement and does not fit at all nicely with what investors heard from this team in June. It is a complete, absolute embarrassment.
And here's what Raj Subramaniam, the CEO of FedEx, is saying. Global volumes declined as macroeconomic trends, which you were alluding there to a moment ago, significantly worsened in the quarter. Now, both of those internationally and in the U.S., he goes on to say that these efforts that they're kind of looking at right now, the performance disappointing, and they're accelerating some cost reduction efforts. That includes a reduction in flight frequencies, temporarily parking aircrafts. They're also going to close over 90 FedEx office locations. And you think about all of these cost reduction efforts that they're going to be putting forward as well at this time. That means for the end consumer, not just the individual that's waiting for their package to get delivered and tracking it every time, refreshing it when they order something online. It's also those large business partnerships too. There's going to be a delay in some of those more massive shipments, those business-to-business partnerships. Thus, that also trickles through to the end consumer, and that decreases the overall kind of value experience and the customer experience that the customer of a FedEx customer is having at the end of the day. And so all of those compressed together really lays out the broader global picture too. And we're unsure about how long this is going to be the case as of right now.
Let's dial back the embarrassment maybe a little bit. I mean, listen, Fred Smith led this company for decades. He created this company, and now he's handing it over to someone else at what is a really challenging time, and maybe didn't set up.
But he's been there. Schumer, let's bring in Joe Brusuelas, RSM chief economist. Good to see you, sir. Although good on some very bleak news, let's talk more about the FedEx news and what it means. A global recession. Would you agree with the assessment from the FedEx CEO?
Absolutely, in complete agreement. The global economy will be in recession in 2023. When you take a
full planetary collapse, worldwide planetary collapse, of course, this is all by design, and you're watching AMTV, hard hitting and in your face, ladies and gentlemen. So get ready. Again, this is all by design. We are in an economic decline here in Western civilization, zero negative growth. At the same time, the head of FedEx is warning of a worldwide recession. I would argue a worldwide slowdown, economic, financial depression. And it's about to get much worse. At the same time, the U.S. Central Bank has actually kept rates so low that we are now living through a hyperinflationary collapse here in the United States of America. So you combine both of that at once, zero negative real growth. Interest rates still at zero, even with a bump up like 25, 50, 100 basis points, won't even matter. Combine that with a record price shock across all assets, food, energy, all the tools and things, building materials, housing that you need to survive. Now, of course, when we study history, we know this, ladies and gentlemen, anytime people's income and their real wages are declining, and they can't support themselves to buy food, and they can't protect their families, and all of their income is going towards that, typically society does break down. And it breaks down in a very, very significant way, ladies and gentlemen. Trying to brighten myself up there. By the way, for those of you wondering, this is not a green screen behind me. This is actually real. You can hear that? Because I know sometimes people ask, like, is that a green screen behind you, Christopher? No, it's not a green screen. It's a beautiful day out here in Hawaii. I'm actually looking at real estate for the island project.
Actually, a lot of news, and what the FedEx CEO came out and said today, worldwide recession. Now, first of all, FedEx, just deliver packages. Don't tell us what's going to happen with the economy. Just deliver packages. But why they are chiming in, the reason FedEx is chiming in on this is because they see their own business and what's happening within their company and their services. Interesting, right? So FedEx CEO Raj, and I got to try to pronounce the last name, told CNBC's Kramer, buy, sell, on Thursday that he believes a recession is impending for the global economy. His pessimism came after FedEx missed revenues on earnings. And that is what he said. Will there be a worldwide recession? Well, as long as they don't change the definition.
Going on right now and talk about some warnings. There's some very serious warnings in the market right now. We're going to jump right in. Actually, we don't. Well, we're going to jump right in with this one. Jamie Dimon warned something worse than a recession could be coming. Now, we've been talking about this for quite some time. Ever since the spring, I said, we are in a recession. Don't listen to the talking heads. Do not care about them changing definitions of what a recession is. We are definitely in a recession, and it's going to be much, much worse. I've been talking about that. Well, I've been warning people about that for now 2 years. But Jamie Dimon obviously has a lot of insider information. To say that he's an insider is an understatement. And he warns something worse than a recession could be coming. And it's not that it could be. He knows that it's coming, and it is going to get pretty gnarly. But now what's really interesting is today, market's down, as of the recording of this, a couple hundred points. Why? It says right here, Dow drops 200 points as traders fret over FedEx warning. And what's the FedEx warning? The CEO says he expects the economy to enter a worldwide recession. So this is total crap, all right? Total crap. We all get it. We all know it. We are in a currency collapse. We have inflation running amok all over the world, and we're going to see hyperinflation, transitory hyperinflation around the world as well. And for someone to come out and say, oh, well, we're going to enter a recession, and that's the reason why, come on, it's going to get worse than that. Now, interestingly enough, today we see gold up just barely. We have oil up, but this is what's really interesting right here. I just saw the headline came across. But bonds, here it is. The 2-year Treasury note tops 3.9%, hitting the highest level in nearly 15 years. That is absolutely epic. And again, if you go back 15 years, you'll see that the reason why that happened was because there was a lot of turmoil in the markets. Now, I believe that we are entering one of the greatest collapse in our country's history when it comes to economics. I think it's going to be short, it's going to be hard, and it is going to be fast. The Great Depression took around 14 years to recover. I can see this